be speaking with the management of Shriram Properties. Now, the company came out with its numbers in the fourth quarter. Shriram Properties has reported its highest ever revenue and profit, and this was largely driven by the record handovers that the company had done in the fourth quarter of FY26. Apart from that, if you look at the profit before tax was also up nearly 25% on the back of lower finance costs. Customer collections also reached a new high of 1,660 crore rupees. Let's get the management, Mr. Murali, the CMD of Shriram Properties, to understand more on what lies ahead for the company. Firstly, to start off with, sir, for FY27, how's the pipeline looking like? What is the gross development value? What are your targets when it comes to pre-sales number and collection numbers?
Fantastic. Thank you. Thank you for hosting us. As you've seen, FY26, we have done a fantastic performance, and we are looking ahead on FY27 from 2,350 crores in FY26. We are looking at growing to 3,500 crores sales value in FY27, which is roughly about 41% growth is what we are looking at. And we have got about 6+ million square foot launches. And the collection also, we are looking at about 1,600 to 2,000 crores collection to reach. So from 4.15 million square feet, we are looking at about 5.5 million square feet growth. So FY27 looks very, very robust, and we are aggressive, and we are extremely optimistic about the market potential what we have today.
And sir, if you could just also share with us, what is your long-term revenue and profit number that internally the company is eyeing for?
Can you come again?
Wanted to understand the long-term revenue and profit numbers that the company is internally targeting.
We are looking at the growth of, on the revenue side, at least about 30 to 35% growth in the next 3 years' time on the revenue. On the profitability, which will be slightly more than that.
Okay. And any debt concerns that you have, anything you plan to repay on that front, on the balance sheet front?
Ours is the, most appreciated company in real estate space in terms of debt equity profile. Our debt equity profile is one of the lowest in the sector. Ours is about 0.25, 0.28% at this point of time. And there is, in fact, there is a lot of leg space and leg room for us to, raise extra capital, which we are very cautious about it. We have been maintaining this 0.25, 0.3 debt equity ratio for a long period of time. And we also generated a good amount of cash flows last year, free cash flow, which close to about 250 crores of free cash flow generated, about 370 crores of free cash flow has been invested into new projects. As an organization, we are looking at generating at least about another 550, 600 crores of free cash in the next 2 years' time. So debt equity ratio is not at all a concern. In fact, we have got a much bigger legroom for us to expand our growth today.
Okay. So in FY27, are you planning to enter any new markets? And given the overall market scenario, the macro scenario, the war, because of which there are a lot of concerns on the economy, Indian economy as well, given the fact that crude is trading around $100 now per barrel and rupee has been depreciating. There is a lot of concerns on the economy as well. Are you seeing any initial signs of slowdown or lower bookings coming in?
Last May, we launched a project in Pune, one single project. That is the first entry outside South India, other than Eastern part, in Western part. As we speak today, we have got close to about 5 million square feet across 3 projects. There is a good growth momentum coming up in Pune. We are an established player in Pune, and our brand is well reckoned in the marketplace. That has given us encouragement to look at maybe Bombay. We should look at soon. We start exploring Bombay as a market, because we also wanted to look at Pune established first, then look at other markets. So the results have been very good. On the overall thing, what we feel, government is doing a fantastic job in controlling inflation, controlling managing the oil crisis. And we have an exemplary example of how government has managed COVID. And we hope and expect government to manage this current situation also in the same way and come out with a flying color. With respect to the demand, I don't see demand coming down for real estate sector today, particularly in the space where we are operating, mid-market and mid-premium segment. We don't see the demand coming down at all. Also in the markets where we operate, whether it's Bengaluru or Chennai or Pune or Kolkata or Bombay, when we look into it, so I don't see demand coming down at all in this space where we are operating. demand is only going up further and further. Overall, on the cost is in good control today. On the selling price also, there has been a reasonable increase which is happening today. We, appreciate government, intervention from time to time in making sure that they give this positivity to the sector and as well as to the overall economic situation. We are extremely bullish on this.
And out of all the markets that you're present in, which is the fastest growing market and where we are seeing an highest improvement in pricing?
All the markets are doing good. If you need to prioritize, maybe Bangalore, then Pune, then Chennai, then Calcutta. Calcutta, as you see, we got a large land bank. Now, new government has started pushing quite a lot of reforms. We, are getting good signals. We are all getting good signals as a nation. A lot of new industries are likely to come up is our hope. And a lot of new infrastructure push is likely to happen in Calcutta. So Calcutta is the most important city for the country because that Northeast, Calcutta is an important city. If Calcutta grows well, entire Northeast will take a, balanced growth. If Northeast grows well, entire country will have a right balance. So we hope government will push quite a lot of infrastructure growth and employment growth and also, new industries to come up, which we are seeing good signs today. So our land bank, what we have in Calcutta, could be a big fortune. We are very bullish about Calcutta also.
And one thing I wanted to check with you on the pricing front, given the fact that you were also mentioning, in fact, it's a fact that retail fuel prices have started to move up, which could also lead to higher cement prices. Steel prices are already moved up on a YTD basis. And even PVC prices are moving up. So in fact, tile pipe prices are also expected to move up, given the fact that gas prices have become expensive. So any impact on the cost side that you're seeing?
Yes, construction cost, there could be an increase. We are conscious about it because of all this, impact on whether it's crude or oil, inflation, whatever the challenges, there is a possibility construction costs can go up. You should also not forget land price also gone up significantly. All that puts pressure on, margin, but growth will not be a challenge. There is a big demand, growth will continue to be there. On the construction cost, yes, there is a challenge. We are conscious about it and we are working towards that. Hope government has intervened in the past and ensured that inflation was in control and construction cost was in control. So it will continue to be in the same way as our wish and desire. And we have a lot of confidence in the government in making sure that this is in good control.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Shriram Properties. Well, that was the management quite confident on the growth path, and tall guidance is something that the management has given for FY27 and FY28.